Alrighty, traders. First and foremost, I want to say have a great Easter. For those of you that celebrate the Easter holiday, if you don't, just have a great few days off or a couple days off. Depends where you're at, I guess. Well, guess what? We're going to close at all-time highs. S&P, we're on our way to 4,030 will be our next stop. It's really amazing, basically, if you think about it. The S&P has doubled in value, almost doubled in value since sorry guys, I couldn't find the mute button quick enough. Sorry. We've basically doubled in value since a year ago. We've gone from 2,200 to 4,000. That is, sorry, Raj, that was loud. I was actually told by a doctor years ago when I was a little kid. I used to hold in because I would sneeze and I would hold it in, actually plug my nose and hold my mouth closed. And the doctor years ago told me that was really bad for me. So now I just let it out. Like it just doesn't matter. I just let it out. I don't try to hold back. I just let it rip. So anyway, so if I like made you guys jump out of your seat, well, that's probably that was the reason why. Anyway, but like I said, this market has actually pretty much doubled since last year. At this time last year, I mean, a little bit more than 12 months ago. That's amazing. That's at record-breaking. I mean, I don't know if we've ever seen anything like that ever. I mean, let's just kind of look at this really quick, and let me zoom. And actually, let's do this. It's pretty amazing. Okay. So from after the .com crash, which would have been, mid 2000, in July of 2002, we bottomed roughly, in 2002, and we went from 700, let's say 50 to 1,500. So we doubled, but it took us 5 years. That's amazing, right? I mean, I sit there and go, wow, like that's pretty amazing. Like, I mean, I don't even know what to say about it other than holy crap, like I think the thing that bums me out the worst is I was adamant myself about just waiting till we got to 1,800 or sub 2,000. What I was looking for, actually, it was if you guys maybe remember like this, I was waiting for like sub 2,000 because I'm like, okay, here's a 50% retracement. I'm going to wait for just a little bit below that, get everybody out below 2,000, then I'm going to get long everything. And I have, other than, some of my really long-term stuff, but for the most part, just I missed the boat, and it's a bummer. It really is. I mean, this has been the probably most amazing rally you could ever. I mean, I don't know if we'll ever witness anything like it again. I really don't. It's the response has been crazy over a year. And I mean, I was going to go in hand over fist down here, sub 2000, like just put it all, on the line basically. And it just turned ahead of me getting in like aggressively. And instead I just have to write out what I got, which, it's just not, it just sucks. It just sucks that I was excuse me, really quick. Not as flexible not as flexible as I should have been. So anyway, I can't cry over spilled milk. I just have to look at the market and go, wow, that's been, it's been amazing. So now, what do you do here? And I mean, stocks are trading at all-time highs, guys. And let's not ignore the fact that taxes are coming. And yes, we're going to have spending and all that, but when you're closing for a long weekend and you're at all-time highs, I'm pretty sure we're going higher from here. So I don't think it makes sense if you're, trading equities and you're like, oh, screw this, Blake. I'm gonna fade this move. I don't think that makes a lot of sense ahead of a long weekend, and risk either. So if you guys are, the only thing that I can actually see here is maybe, you take the dollar Canadian or like US dollar Norwegian krona. I mean, even the US dollar Mexican peso is weak. I mean, my stops are really close. They're like below the support right here at 2024. So, I mean, I came really close to getting stopped out, and I might actually end up getting stopped out of this one. But, I'm still long the dollar Canadian. My average is at a decent price and I'm still sitting in it. And, we're just sitting on support here. The dollar Norwegian krona, I still own this a lot lower, but it doesn't matter. It's, it's sitting on support and it could break down a little bit further with risk up at these levels. So, I mean, this is really, it's really amazing. Yeah. Or really, they're just kind of sitting there, and I'm just kind of holding them because I know that, we get a little bit of pullback and risk, and this one's going to move. And same with the dollar Canadian, and I'm hoping the dollar Mexican peso just avoids that. I want to talk a little bit about the Aussie, because the Aussies bounce back. We got a little false breakdown, but remember, we haven't closed the week, and we still have non-farm payroll tomorrow. So just remember that. I can't believe non-farm payroll is being released tomorrow. It just, blows my mind. Anyway, you can see the dollar or the Aussie dollar is right up against resistance. And matter of fact, let's and Jason said, this rally was financially engineered. It was, and it is. But where does it stop? And how far does it go? Your guess is as good as mine. You know what I'm saying? It really is. And I'm going to be, I'm going to be brutally honest here as far as, and I don't think Steve's in this ballpark or in this, he would agree with this. I don't think he's logged in right now, but I'll tell you that we're probably going to have a boom environment, over the next year. I think that we are going to see some massive spending, and now whether that translates to equities moving higher, I don't know. I don't know. My opinion is it's already all priced in. That's the whole reason why we've done what we've done. So, but I have to agree with Jason that it won't continue at this pace once the Fed backs off. Correct. When's the Fed backing off, Jason? $2023, right? Unless they signal that they're going to start doing some tapering, we're probably just on pace to continue to grind higher. Pullbacks will be bought, and that's it. I mean, it's a pretty, I mean, it's simple in the fact that the market's just going to continue to go higher, and it's going to be bought on pullbacks until the Fed says, they are tapering. And once we get an indication of that happening, yeah, you're correct. I think this is all financially engineered. Now, I want to point out the Aussie really quick. We are at resistance. It's trendline resistance. It's also a 618 retracement. If you're long some Aussie dollars, be a little careful here. Like long Euro Aussie, I think is a good trade at these prices, right? It's we've held some support here. I think it's worth taking a shot at. Especially if you think that the markets might back off ahead of, the FOMC tomorrow. I think this is it. These are the ones that you play. You play some of these crosses. Euro New Zealand, it's back down towards support. You can probably play this one on the long side. Pound Aussie, I think if you want to play this one on a dip, Pound New Zealand. If you ultimately think that the Aussie and the Kiwi are going to move lower, I think those are the trades that you play for right now. Jason says, I think yields will force their hand at some point. Right. I agree with that too. I mean, yields are down at support right now. This is channel support. We've been talking about this. We're at channel support. So maybe yields do bounce at this point, and maybe stocks come down as a result. Intraday. Anyway, I just want to say that it's amazing to me. I've, in my 20 years, I started trading in 96. So let's look at that and what that looks like. I thought I've seen it all. I mean, I really, really did. Right. Let me go to. No. Where the hell is my? I don't want to look at those because I think it's not giving me enough data. Is this one? No, we've got that one. Here, it's this one. This shows us all the data. Oh yeah, I mean, this gives us enough data. So I started trading right here, like end of 2000 or 96, excuse me, November actually of 96. If I had to put a date on it. So November, oops, let me grab this. So this is where I started trading, like actually trading, not like kind of my stockbroker days were behind me, and this is range, then just absolute rip higher in risk. And look where we're at now. It's been an amazing move. And like I said, I've never seen anything like this. And I've been around, so I always like to say, when I'm looking at a 200 period moving average, and this has worked well for me in the past, but this doesn't translate right now. This is the 200 day moving average, or 200 period moving average. Look how far away we are from it than any other time in history. You know what I mean? So when you go to like the daily charts, when you look like the maximum distance away from the moving average that you're going to get, minus this is COVID, so you got to forget that for a second. Okay. That was obviously a COVID extreme case. I guess that's about right? Something like this. We're about as far away from the 200 day moving average as we get. This one was pretty stretched here. Like that was pretty far. Okay. So, I guess we could go higher, maybe to 4,100, but you pull so far away from the, Amira says it's not correct. You need to see it in percentage, not absolute dollars. What do you mean? As far as the S&P and the moves? But even this move that we've seen here, Amira, I disagree with you. I totally do. We can talk in percentage terms, from when I would go back and I guess in percentage terms, 100% rally. And then from here, I guess it is 100. Well, I guess it is. It's basically 100% rally. But this like for this move right here, which was about the same percentage as I mentioned before, it took us 5 years. That's after the .com crash. Right? After the financial, after the great financial crisis, the GFC, it took us, well, I guess about a year to double. That was, I mean, that I guess you could actually say that was pretty massive too. But that was from such a low level, you know what I mean? Like we lost basically 70%. I mean, what was the loss there? I mean, from the highs, 60%. I mean, like 60% of everything. Like, let's imagine this happened to me. You had a 401k or an IRA and you had $1 million and your $1 million is worth $400,000 at the low. Just say roughly it's dollar for dollar. I mean, wow, right? So, we had this move here for COVID. Yeah, it was a fast move down. We lost 30%, right? So you had $1 million and now it's worth 700 grand. That's a big haircut. Sure, I agree with that. But then you double. Takes you a year to claw back half of your gains, or yeah, but you double your from the lows, but you're still way off from where you'd been. To even make that money back that you lost post financial crisis, it took 4 years. Here, you made back what you lost in 6 months, and then you double it, or, even if from the highs of what you had. And I'm just, again, just talking from high, you're up 20% post COVID, right? I mean, these moves are insane. It's insanity. I've never seen anything like this. And I've been through some shock and awe. But I'll tell you what, and I'm going to leave you guys with this. I know we didn't talk a whole lot about, things that are happening right now, just because remember, oh, by the way, we're not going to have this. Well, as you guys know, we don't have the roundup. We're not going to have face webinar tomorrow because after non-farm payroll will be over. I shouldn't even be getting up early for a non-farm payroll. I really shouldn't. I want to sleep in, but I'll be here. But what I wanted to say is that this is very reminiscent of 2000. I remember, so here I was, and I want you guys to, I want you guys to think about this. I live, let me Biltmore Fashion Square. Okay, so this is where I live, right? And I'm just going to show you some. This is the Biltmore Fashion Square. It's a big shopping area. It's like one of the no, not Fashion Square. Shoot, Biltmore Fashion Park. That's it, Fashion Park. Okay. So this is the Biltmore, right? And it's like outdoor shopping. It's been around for 40 years, right? I mean, it's beautiful. If you live in Arizona and you want to shop at like the nice area, and this is the Biltmore area, right? And I'm just kind of showing you around like what it looks like. That's what it looks like outside. Like I said, this has been around for 40 years. It's a beautiful shopping area, right? All high end, Saks Fifth Avenue and all that crap. I remember I was 26. I was driving my 911, and I had my two trader buddies. We all had Porsches, and we all had 911s, and we were sitting out front of Houston's, which is the restaurant here, Biltmore, Houston's. We were eating in this restaurant. We're sitting on the patio. We're sitting on the patio. Biltmore, Houston's. That's what I wanted to look for. Okay. So, and this is not it. What is this? What is all this crap? Anyway, long story short, we were sitting at this restaurant, and our cars are all valet parked out front, and we were 26. One of my other buddies was 25, and then there's another guy who was 26, and another guy that was like 27, and we all had Porsches, and one guy had a really nice Mercedes, and all of our cars are valet parked. We're sitting outside on a weekday after, like at 10 in the morning, after we traded the open, because markets open early here, and we're sitting there looking at our cars, and we're like, you know what? When young kids like us are driving cars like this, we're near a top. We are near a top, and we were about, I want to say about 6 months off of finding the actual, maybe about a year after finding the peak, because this was like 99, right? Maybe early 99. And, I have the same feelings right now. I mean, when you got stupid young kids, and I say that I was a stupid young kid back then. I really didn't know my head from my butt. I was just kind of lucky in a sense. I was in the right place, right time, right stocks, right time, that type of thing. When, TikTokers nowadays is the equivalent of what we were back then, or, Wall Street bets or whatever. A lot of right place, right time, right position, and made a lot of money. Now you just buy a dip on anything, and you seem like a wizard, or just a guru. But the fact of the matter is there's a reckoning coming at some point, and when it comes, people that have never navigated through that. Takis asks, what kind of car are you riding now? Just to know the top is near. Let me just put it to you this way. I live in Arizona, and it's sunny here, and I keep the top down 8 months out of the year. So I'll just leave it at that. Top is down right now, and it sits in the garage. But what I'm going to tell you is that we're near a reckoning. I don't know when it's coming, and I'm not here to figure that out. But when you see these outsized moves in the markets, and everybody's just making money hand over fist, just buying stuff, and market goes up every day, we're near a top. I near could be a year from now, it could be next week, I don't know. But I after watching the market just basically double in the last 12 months, I'm definitely getting a little concerned. You know, I've been concerned, you know, this move, but this move has been very aggressive. And but I think there could be more. I mean, you know, you look at the charts and the S&P, you know, we could stretch to 4,100. Why couldn't we? Why can't we? Why can't we stretch another few percentage points here? I mean, this is, you know, it's a massive move, but why can't we? Why can't we move up another, you know, 2% easily, right? So just keep that in mind. I think we have to be defensive, and just be. And one of the other things that I want to mention, to you, and I know I've been talking a long time, and I typically don't do this, but it's, you know, it's on the eve of a holiday or whatever, so I'll, you know, whatever. So we'll let it go. One of the other things that that really worries me is the Aussie. I know we had a little false breakdown today. You know, we broke through the neckline here, right? We broke through the neckline, and then, you know, we rallied back. But the Aussie trades like crap. So does the Kiwi. I mean, I know the Kiwis bounce back too, you know, after maybe a double bottom here, but it still looks like hell. I think these currencies are, you know, set to roll over. So, these are going to be the first ones that are on my radar to really smack, you know, as you know, if I feel that the markets are ready to turn, these are some of the currencies that I'm going to hit the hardest. You know, I mean, I'm short a little bit of Aussie right now, but I'll be out. I'll take a 10 pip gain, take a 10 pip loss, no big deal. I don't really care a whole lot at this point, not on a day like today. But when I feel that the market's ready to go, these are going to be the ones that I prey on the week, like the Aussie and the Kiwi and the Canadian too, for that matter. Okay. And Amira said, you need a Tesla. You know what? I respect what Tesla does, but you know what I like? Like when I have the top down and I hear the engine roaring, I love that. I just love it. But my dad's a gearhead, and he's rebuilt an old 69 Camaro. He's got a 62 Ford Fairlane, like a 2-door, like race ready one. I grew up with a dad that is a gearhead, muscle car guy. So I have a hard time with Tesla for that. I need to hear it. I need to hear it and smell it. All right, guys, I got to go. Thank you all for your continued support. You guys are awesome, and I appreciate each and every one of you. Christian asked, Blake, do you buy an ETF like the Dow and the market and the market crashes? Will there be liquidity to close the position after the crash? Well, I don't play those ETFs typically. Like if I feel the market's going to go down, I'll sell futures is what I'll do. That's what I'll do. Hey, you guys have a great one, and thank you so much. Have a great, wonderful holiday weekend, and I'll see you tomorrow morning I'll be very tired, but I'll see you on tomorrow morning on the Face webinar. Thanks, everybody. Ciao.